Welcome in. You are listening to a daily editorial here on the KE Report. I'm chatting with my good friend Jordan Royburn. He is the editor of the Daily Gold website. Jordan takes a look at the gold sector in terms of the overall physical price as well as, well, stock prices and a kind of basket of stocks that he has that he builds his own, for the most part GDX and GDXJ type investment vehicles, to take a look at the way markets are moving. And Jordan, let's look at the general movement of gold stocks. I'm looking at GDX right here, and even during last week when gold was starting to move up on these geopolitical fears, the argument was that the stocks weren't exactly sharing in to a greater extent on these moves up. I have a weekly chart here, and in my eyes, GDX was unable to break out of this shorter-term downtrend line that's only been in place through this year. But again, this is the almost fourth time it knocked its head on it, and the way that it's trading this week is we are very close, again, to at least testing out this downtrend line. What's your general comment, Jordan, on kind of the slowness of the precious metals stock sector right now?
Well, Corey, that the slowness, again, is reflected in the volatility readings, which are depending on what indicators you look at. I mean, if you're looking at gold, for example, and the GVZ, which is a contract that's traded, that's basically the gold VIX, you could say. There's another one called ATR, Average True Range, and then there's the width of various Bollinger Bands. And all these things with respect to gold are at or nearing 8 to 10-year lows, and so obviously the very low volatility in gold is being reflected in the gold stocks. And since February this year, they've been trading in tighter and tighter ranges, and that's going to lead to probably well, I shouldn't say a spike up in volatility, but an increase in volatility at some point, and then perhaps that increase could lead to a spike in much greater volatility. And obviously, seasonally, I mean, I'm not a big seasonal guy, but something I've noticed, Corey, in more years than not for precious metals, September is really a key month because it can set the tone for the rest of the year. I've just noticed that in many years over the years, and we're lining up for that to potentially happen again, where this quietness of the market could probably continue into early September. But I think by the end of September, we're probably going to get a break one way or the other here in the precious metals sector.
Any idea, Jordan, which way that break could come? Because I know most people, well, some people sometimes like to look at the US dollar, but I don't think that's had a huge impact on the way that gold has been trading, simply because the US dollar has been on almost a straight line down for the first half of this year. But what about the US stock market? That seems to be distracting investors.
Yeah, I mean, that's a great point, Corey. There's a lot of cross currents with respect to precious metals, so it makes it kind of difficult to get a handle on where things may go. But I think the stock market is really critical. There's a lot of analysts I follow and trust, and they're expecting that we could see correction in the stock market, not a crash, but a correction. And obviously, if you look at sentiment indicators, if you look at valuation indicators, and then if you look at breadth indicators for the stock market, the participation in the recent rally has been waning. Fewer and fewer stocks are making new highs. More and more stocks are showing more weakness. So I think any, let's say like a 7% correction in the stock market or 10% correction, if that happens, I think that's enough to get gold through 1,300 and 1,375. So that's something I'm looking at as a possibility. And I think even though the miners, I mean, we've talked about it, they've lagged the metals for so long, but I mean, Corey, like it's very, I mean, this is very subjective. It's very difficult to say to get a proper read on it. But it's one thing when the miners have been lagging for a few months, but they've been lagging now for so long that everybody knows about it. And I think if gold breaks out above 1,300, you will see the miners catch up very quickly. Like if that happens, you could see the miners just over a period of 2 or 3 days, suddenly they explode and you get some really big moves. I mean, that's happened in the past. I mean, the miners, generally they lead the metals, but it's really subjective with how you want to read it. And I don't think the relative weakness in the miners right now, I don't think that would prevent the sector from having a really good move higher here if if the stock market has a correction and then the Fed's on hold basically for the rest of the year. So, I mean, that kind of sums up what, one possibility I'm leaning to as far as the next month or two.
Well, that would be a big change if we did see the Fed go on hold. I know that when we're recording this, we have the Fed minutes coming out in about half an hour, but I think Dudley's comments yesterday or 2 days ago really said it all, that the Fed seems to be on track for some quantitative tightening, a slow unwind of the balance sheet coming up next month. And then again, I think everybody understands that they're watching the markets very closely. If the markets panic and go through some sort of a, let's say, 10-15% correction, then there's a very good chance that the Fed will back off of any more rate hikes by the end of the year. But so much is, again, just dependent on the markets. And talking about the markets, Jordan, have you followed any of the breadth within the markets? Because a lot of what I've been reading has been showing that fewer and fewer stocks have been supporting this move higher in the markets.
Yeah, if you look at the percentage of stocks in the S&P 500 that are trading above their 50 and 200-day moving averages, that has been diverging negatively. Now, that can happen in a bull market sometimes, so it's very difficult to read. But I think it's diverging enough right now, and you factor that in with the really bullish sentiment. Like if you look at, I think, short interest in the S&P 500 is at a multi-year low. So that means people trying to short the market. You need that because those people need to cover. So that provides buying fuel for the market. And that's at a critical low now. That just means there's very low potential buying fuel from shorts. So if there's really any negative thing that happens, I think it could easily trigger a 7 or 10% decline in the stock market. And obviously, that would be very gold bullish. And so in addition to, I mean, you mentioned the dollar, Corey, but I'll add one more thing. I'm also watching how is gold performing against foreign currencies and how is it performing against the stock market. You have to look at those ratios to really get a sense of what's the relative or real performance of gold. And so if the dollar is rallying, gold can still rise if it's outperforming foreign currencies and outperforming the S&P 500. And if those ratios are rising, then I'm going to be less worried about potential dollar strength. Now, if those ratios are falling and the dollar's rising, then that would give gold very little chance of breaking out. But so far, gold has been showing increasing relative strength, not only against foreign currencies, but against equities and also against bonds. So the strength that we saw on this recent rally to 1294, if that continues in the weeks ahead, I think that's going to be enough to push gold above 1300.
Jordan, one final comment regarding gold. Yes, if gold can break 1300 on the upside, then I do think that would encourage a lot of investors who are sitting on their hands to start injecting some of this money that they have. But what about the lower side? What is a down target that you're watching closely that would turn you maybe a bit more bearish in the short term?
Well, I'm glad you mentioned that. 1260 as far as the short term really seems to be, I don't want to say the line in the sand, but I guess I could say that. 1260 around there, if we get it like a weekly close below that, then that would basically say gold is probably going to consolidate for more than a little while. There's very strong support now, Corey, in the low 1200s. So those are the levels you need to focus on. Very strong support, low 1200s. But in the short term, for gold to be able to break through 1300, it has to hold above 1260.
All right, Jordan. Hey, always great having you on the show on a weekly basis. It's, again, a market, especially for gold, that has been very much range bound within this $100 range, unable to break out to the upside, but also not breaking down. So I'm encouraged the further we can stay within this range and move through summer, but I know that a lot of investors would sure like to see a breakout. Just hasn't happened yet. Jordan, great chatting with you. Thank you.